consumer. Let's address another set of earnings. We've got Aasif Malbari, the CFO, joining in on the show right now. Aasif, hi, great to have you today on ET Now. Thanks for joining in. Tell me what the overall demand trend is like, especially rural demand, and how the recovery signs are looking like.
There is a little bit of a K-shaped recovery, which we are kind of seeing in the market, where certain segments are kind of seeing a strong consumption growth, where there are parts of the economy where consumption growths are not as strong. So there is a bit of an economy there. But yeah, I think even with that context in mind, we're quite happy with what we've delivered in the last quarter. We delivered a 5% organic and 8% consolidated underlying volume growth. So quite happy with that delivery, with that in context in mind. And we do expect, as things stack out going forward, there should be a gradual recovery from here on.
Okay, expecting the gradual recovery to continue. But if I understand it right, the company has actually unveiled India's first registered active base incense stick product, and the overall market for this product could be 1,200 odd crores. Could you talk to me about whether you've got the approvals, and if not, what's the launch pipeline looking like?
You know, it's initial days to kind of talk of a response, but we're quite excited about our launch of Godrej Agarbatti. It's India's first and only government-registered chemical-based agarbatti, and it's a large market, and it's fairly unorganized with a lot of illegal kind of sticks kind of being available in the market. So it was important as market leader we enter this market and shape this market and formalize it. We've come out with a product which is significantly more safer, and hence it is accessible. This ensures that we now have a complete play in the entire HI market in terms of all price points, all formats, and yeah, it completes our product portfolio in HI.
Has unveiled India's first registered active base incense stick product as well, and just wanted to also get in a sense down the line what the outlook is in terms of your individual geographies. Indonesia, for instance, Bangladesh, strong growth. Can we expect this trend to continue?
Kind of gone through a fair amount of transformation in the go-to market which we have there, and if you see over the last 3 quarters, we've delivered very strong underlying volume growths. They have been close to 10% in all the 3 quarters. We are definitely expecting Indonesia to continue to perform strong in the quarters to come. So we're very happy with the performance actually in Indonesia.
Right, and you've managed to deliver better volume growth as well versus your peers. What's the trajectory you hope to clock in now?
Yes, we do believe that because of focus and all the actions which we've taken over the last few quarters and years has been to kind of improve the underlying volume growth, and the strategy is playing off. 8% underlying volume growth is definitely something which we are happy with, and we do expect that as we go forward, again, we should be able to sustain strong volumes growth, given the step up which we've done behind marketing investments, the introduction of new products which we've launched. So with that, we do expect that our volume growth journey should remain strong.
That point is taken. But what about your margins? Because you're launching a lot of products. Despite that, your margins have held up around that 20% mark. Do you expect that to become the floor now, and it should only trend higher from here on?
So I think one important part of the improvement in the margins at GCPL has been through mix. So we've significantly grown faster in categories and in countries where margin profile is stronger. At the same time, parts of a portfolio where a margin profile was weak, we were able to kind of take actions to simplify that, either through SKU rationalization or through reorganization, which we are doing in parts of East Africa. So as a result of all of these actions, we're able to, in a sustainable way, strengthen the overall margin profile of the company. So we do expect our margins to kind of sustain.
And regional players as well are coming back, impacting growth. Which are some of the segments that are seeing higher competitive intensity?
I think there are multiple segments in which regional players do not kind of enter even in benign commodities in our industry. The reason for that is in a lot of our categories like HI, like air, these are with very deep technology interventions, and they require a fair amount of capex and research and development. So those are not the markets where we see regional competition enter. Some categories like soap is where you see when the commodity prices are lower, some regional players enter, but it is not something which is as significant for us as possibly it is for some of the other competitions.
Right. Also wanted to understand if there is any change in mix that you're expecting for Deo, and whether premium versus mass. Wanted to understand what is the trend really that you're picking up in this particular segment.
So I think the overall integration of the deodorants business has been completed. We've delivered all the synergy benefits, and hence now it's kind of getting to business as usual for us. We are definitely expecting the portfolio to kind of grow in strong double digits going forward. And there are some early green shoots which we're seeing in the portfolio as we go ahead.
Okay, on that note, Asif, we'll let you go. Appreciate you making time and speaking with us. So that's the management